Hey, how's it going? It's Jason at Key Home Lending. Welcome to this little presentation. What I'm going to do is I'm going to teach you how to quickly and easily increase your credit score so that you can get a lower mortgage rate, you can get your payments lowered, spend less, pay the mortgage man less money, and in some cases, if you're getting a HELOC or a second mortgage, a higher credit score will mean that you can borrow more money. So if you're ready, if your credit score is under 780, if your credit, by the way, if your credit score is 780 or higher, you can ignore this. You're fine. In the eyes of the mortgage companies, you have perfect credit. Don't have to do a thing. Turn this off. But if your credit score is under 780, even a couple smidgens under 780, then you want to listen to this. And this is going to work if your credit score is high. Actually, the example I'm going to give you is somebody whose credit score is literally 778, and we needed 2 points to get her to the absolute best rates. So it works if your credit score is high, but it also works just as well, probably a little bit better, if your credit score is lower. So if you're looking at if you have 600 or a 580 or 640 or whatever your score is, do this. Wait a little bit, but not too long, and your credit score will improve. All right, you can see my contact information flashing below. By the way, if you want to get in touch with me to qualify for a mortgage or just talk about your credit, see if you can find a. If you'd like me to hook you up with a terrific realtor, just reach out. Again, info is below. So what I'm going to do is I'm going to look away for a second, and I'm going to bring you to a credit report. A lot of this is redacted, obviously, because this is my client here. So I want to make sure we're going to go to the very beginning here. I want to make sure I'm hiding all of her personal information. But she is closing today. And like I alluded to in the beginning, she had a credit score of 7. Her middle score, and you can look at it at the bottom. When I ran credit on March 31st, her credit was good, but it wasn't perfect in the eyes of the mortgage company. It was 778, just 2 points off of where we needed to be. So we needed to improve it because we had a little bit of time, and her interest rate and her fees were riding on it. Again, if I calculated it out. If I could get her to 780, which was 2 points, she was going to save like 700 something bucks. So didn't do anything for me, but for a client, I mean, this is awesome. Keeping 700 bucks in your pocket just for bumping your credit score up. Of course, you'll do this every single time. So let's take a look at, this is where we were on March 31st. And then I reran it on May 15th. Again, we're closing today. Today is June 1st. So we had some time. It was kind of a longer close period, but you can still do this in 30 days. But you can see, if you look to the very bottom, that her credit score is now 804. So we went from 778 to 804, which is 26 points in about 45 days. But again, you can do it sooner. So how did we do it? What's the magic pill, right? How do you do it? So there's a couple different things you can do. What I'm going to focus on is what her challenge was. So let's go over here to the March 31st. Here we go. She had an account with Citi Cards, and her credit limit was 12,600, and her balance was 6,500. Right? That balance, the ratio of credit limit to balance, was a little bit over 50%. And what you should know, this is the kicker right here. If your ratio is 50%, 60%, 80%, 100%, shoot, if it's 35%, then that ratio is negatively impacting your credit. It's bringing your score down. So what I just had her do, it's so simple. So just pay the damn thing off. So we went from here. Forget this American Express account. She paid that off too, but that wasn't a big factor. She went from a $6,500 balance to a $549 balance. Wiped the whole damn thing off. And she did it quickly. She did it in mid-April. So she paid the whole thing off. And what does that do? Because now her balance is less than 5%. And by the way, you don't have to pay the whole thing off. What you're going to look for is you're going to look for 20%. So if you could be at 20% or lower of your credit limit, good things are going to happen. And just like my client, you're going to see your credit score instantly react. Okay. So 20%. So that means if you have a $10,000 credit limit, what do you need your balance to be? $2,000 or less. Now I realize, by the way, this is just showing her score again. I'm going to be dramatic and show, yes, it went up to 804. Woohoo. She didn't have to pay anybody. She just had to look at her credit, and she didn't know. So I just looked at it for her and told her to do this. So now I realize, let me go back to me here. There you go. Back on the scene. So guys, I realized that you might not have a ton of money. She had a couple dollars to throw at this. So she did it. She spent 5,000 bucks, paid it off, and now she's saved 700, and she's not being charged interest anymore either, which is a pretty okay thing. So the moral of the story is, if you have a couple of dollars, first of all, talk to a professional. Now, I'm not a creditologist. That's not my job. My job is getting you the best service and the lowest rates you can possibly get. So I'll continue to do that. But I look at credit reports for every single one of my clients. I connect with credit professionals, and that's what they taught me to do. Say, take these accounts. If your utilization is over, meaning your balance is over 20% of your limit, pay the suckers down. You do that, you're going to improve. So if you don't have money, then that's something different. Like maybe work a little harder. Maybe you can get a loan from a family member or a friend, or maybe it won't work. I don't know. But if you do have a couple dollars in your pocket, then this is something that can bump it. And again, this is not, people talk about like low income, or not low income, low credit score folks all the time. But you can see this will work really, really well for low credit score folks. But even for folks in the high 700s, this works, and it works like a charm. So the moral of the story, what's the moral? Do this, keep your balances at or under 20%, and you're going to see your credit score go up, which means that your mortgage rate goes down, and that means your payment goes down, and that means there's more money in your piggy bank than the mortgage company's piggy bank, and you can qualify for a higher loan, because we look at things like debt to income. When your payment is down, your debt to income is down. So I hope this helps. Again, my name is Jason. My contact information is probably flashing on the bottom of the screen, but if you want to reach me, my phone number is 888-309-9705. Email is jason@keyhome.life, or if you want to schedule a time to chat, go to www.keyhome.life. Thanks. I hope you got something from this. Again, if your credit is under 780, then seriously, take this lesson and apply it. Apply it right now, and you can thank me later. All right. Thank you now for watching, and take care of yourself.